The new standard IFRS 18 Presentation and Disclosure in Financial Statements replaces IAS 1 Presentation of Financial Statements. That's a fundamental standard. It's got a 1 in it, so it's a massive change, and it's one you need to be ready for by the effective date of the 1st of January 2027. That might seem like a while away, but it'll creep up. IFRS 18 sets out the requirements for the presentation and scope of information in general purpose financial statements. It also recognises that other IFRS accounting standards should be consulted when considering recognition, measurement, presentation and disclosure of specific transactions and other events. So it's not a one-stop shop. We'll still need to check the other standards. In comparison to IAS 1, there are some additions and changes which are important. To varying degrees, the new standard will have an effect on all the financial statements. Every organisation is going to have to change the way they work. Specifically, IFRS 18 will significantly impact on the statement of profit and loss, a crucial document for shareholders. Historically, IFRSs have focused on balance sheet items but have neglected statement of profit or loss. IFRS 18 seeks to redress that balance, looking at what should be included, how items should be measured, and how they should be presented in the financial statements. The major innovation is that IFRS 18 introduces 5 categories of items to include in the presentation of the statement of profit or loss. The operating category, the investing category, the financing category, the income tax category, and the discontinued operations category. With regard to the statement of financial position and the statement of changes in equity, IFRS 18 reaffirms the fundamental principles that were already there in IAS 1. On disclosure notes, there are some changes made by the standard setters seeking to ensure that information is presented transparently to give a fair representation of what has actually taken place. One particularly significant development concerns the disclosure of information about management-defined performance measures. Management is required to include all information about such measures in one single note. This note must include a definitive statement that management has defined these measures, and they can't just match exactly with measures adopted by other organisations. You can't just copy your neighbour's homework for this one. IFRS 18 is coming in 2027, so if you don't want to spend New Year's Eve hunched over your laptop, it might be worth looking into it now.